Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. So in this particular video, I'm just going to be showing you the best crypto scalping strategy that works across all markets, whether you are trading Bitcoin, Ethereum, or even low cap altcoins, okay? If you are a fan of fast trades, tight stops, and consistent setups, then this one is for you. Scalping in crypto is all about precision. Okay, you are not here for long swings. You are here to capitalize on momentum, stack up wins, and exit with speed. So this strategy thrives on lower time frames, especially the 1 minute and 5 minute charts, where volatility creates endless opportunities. Now let us quickly start with the core setup. All right, you want a clean chart with only essential indicators. All right, I recommend using two EMAs, and the two EMAs that I'm going to recommend using are the 20 and 50 EMAs. All right, this is the 50 EMA, and sorry about that. So I added the 50 EMA already. Now let me add the 20 EMA. All right, this is the 20 EMA. Okay, now this will help you gauge short-term momentum and act as dynamic support and resistance. So after adding these EMAs to the chart, then you add the RSI set to 14, the relative strength index set to 14 period. Okay, and then also you add your volumes indicator. Add your volumes indicator as well. Okay, so that's all you need. Okay, here's how it works. For trend identification, you look for the EMAs to cross in the direction of the trend. Okay, the EMAs, the 50 EMA, sorry, the 20 EMA should cross above the 50 EMA. That shows a bullish trend, right? And price must be trading above the EMAs. So that is a buy opportunity. We should be looking for buy trades. If price is below the 50 and 20 EMAs, and of course the 20 EMA crosses below the 50, then in that case you'll be looking for sell opportunities. Keep it that simple. Don't trade against the trend. All right, don't trade against the trend. Scalping against momentum is a rookie mistake. Now the next thing is to wait for the break of structure. All right, you watch out for a minor pullback, then a breakout of a recent high or low, depending on the direction. For example, this is a bullish trend, right? So we had a break of structure here, right? You can see that after price formed this high, pulled back, went up and broke this previous high. Okay, so this break is your confirmation of a continuation. So you are looking for clean, impulsive moves followed by shallow retracements. So after the retracements, then that is now the time to look for a buy opportunity. Then the next thing you'll be looking at is your RSI and volume. You need RSI and volume confirmation. RSI should be showing momentum. All right. You should have your RSI above the 50 level. Okay, so it's currently above the, it was above the 50 level around this point. It has to be above the 50 level for buys, but if it's a sell opportunity, the RSI should be below the 50 level. Okay, you also want a spike in volume. For example, you can see how there was a spike in volume around this point where this break of structure happened, and then you can see we had a retest of the 20 EMA. So this was a good buying opportunity. All right, your entry comes after the structure break and a small retest like what we have here, ideally a candle wick to one of the EMAs or a minor support and resistance zone. All right, so you are not chasing the move, you are just reacting to the setup. Okay, now with respect to risk management, you have to set your stop loss just below the last minor low for a buy trade, obviously. Then for a sell trade, it's going to be above the last minor high, right? Keep your risk tight. You are aiming for a 1:2 risk to reward minimum. Minimum risk to reward ratio 1:2. Okay, always know where you are wrong before you even click the buy button. All right, now for your exit, you should exit at predefined levels. Okay, exit at predefined levels. You can use previous levels or let your risk to reward dictate it. For example, if you're going to enter a buy trade around here and your stop loss is going to be below this recent minor swing low, your take profits can be around, key levels, like I said, maybe the nearest resistance. Just ensure you have a good risk to reward ratio. All right, minimum of 1:2 is what I recommend. Crypto moves fast, so you should also move fast as well. Do not set unrealistic targets. Take your profit, don't be greedy. Take your profit at key levels, okay, because price could reverse when it gets to key levels. Now, you can see this particular example here on the chart. Like I already said, there was a break of structure here. I just want to take you through the process so that you understand clearly. There was a break of structure here, and then there was a retest. The 20 EMA had already crossed above the 50 EMA, so we already got the buy signal right from this point, but we just needed confirmation. So there was a break of structure and a retest. RSI was above 50. There was volume spike, so this was a great place to enter a buy. Stop loss below the recent swing low. Take profit around resistance zones. Very easy. It's a repeatable setup, and these are kind of setups that what separates consistent scalpers from random traders. You don't need 100 indicators. You need a clean system, strong discipline, and the ability to execute without hesitation. So if you're serious about mastering scalping in the crypto space, test this strategy, practice on demo, backtest on your favorite pairs, and make this process second nature. And hey, if this video helped you out, smash that like button, subscribe to the channel, and turn on notifications so that you do not miss out on more content like this. All right, thank you for watching, and I look forward to seeing you in the next video. Happy trading.